edition of the virtual Eric Miscoll Show. We appreciate our audience taking time to join in us today, which should prove to be a very interesting conversation. As always, I'd like to thank my co-host Phil Stoten for joining in and collaborating with me on these. The focus of our discussion today is the material supply chain. And this actually follows up, the last show we did actually focused on the PCB industry, so the bare boards. So it seemed appropriate to find out, what's happening with all the stuff you put on those bare boards that actually, make the magic. So to get into that, we invited two gentlemen you see on your screen here. I have Mr. Don Akery, the president of TTI, and also Dale Ford, who is the chief economist with the Electronic Component Industry Association. You can tell who Dale is based on the ECIA logos behind him there. So gentlemen, welcome and thank you very much for joining us today and participating in this. As always, I'd like to just ask you each to introduce yourself and your organizations for the benefit of our audience. And Dale, why don't I defer to you first, sir?
Thanks. Thank you, Eric. Phil, it's great to join you today. I have the responsibility for our market research activities at ECIA. I'm the chief analyst there. I've been engaged in market research on electronics components, more specifically semiconductors and their use for over a quarter century now, feeling old. But the responsibility we have at ECIA is to support our members, the manufacturers, distributors, manufacturer representatives in the authorized channel for electronics components. So everything we do is meant to support those members. And what I try to do is provide visibility and understanding to our members on what is the current state of the industry and help them identify best practices and what's taking place. And that's been particularly important this year in much of the work that we've been doing.
I'm sure. Well, thank you for that. Don?
Yeah, I'm Don Akery, and I'm president of TTI in the Americas, and I sit on the corporate staff. So most of you know TTI is a distributor of electronic components. We specialize on interconnect, passive, electromechanical, and discrete components for the TTI brand itself. So it's, I'll say, somewhat limited. It's probably 80% of the placements on the board, but we stay away from the complex semiconductor world. We do have other companies that play there. We've got a semiconductor group that we've started just the past 2 or 3 years under the brands Symmetry out of the Los Angeles area, RFMW out of the Bay Area, and then out of Seoul, South Korea, Changnam. So that part of the business we're running is still specialty in the complex semiconductors. And then we've got Sager Electronics, and then Mauser Electronics, when Mauser's got the broadline card.
Right. Excellent, excellent. So we got nice coverage of the materials supply chain here. This is excellent. Let's start before we get into the real questions on the material supply chain and ask about the pandemic this year, your experience, the impact it's had on your operations, and also kind of where things stand today. And Don, why don't we just stay with you on this one?
All right. Well, obviously, the pandemic, we started feeling the impact in Asia during first quarter, and, I'll say sent anyone home that could go home. All of our warehouses remained open throughout the world through the entire cycle. So we were lucky. We had enough customers that were considered essential, allowed us to be considered essential. We're back up, I'll say, operating mostly normal in Asia. China in particular is back to normal, visiting customers. In Europe, I'll say it's going a little bit backwards right now, in that there is, I'll say, some countries that have decided to lock down a little more severely. Here in the U.S. And in Mexico and Canada, we've still got the majority of the people working from their home offices. Our warehouses remain 100% operational, as they have throughout everything. I was talking to you, Eric, before the show started, that we had about 30 to 40% of our people back in our offices. But since the pandemic and with the holiday season upon us, we actually turned around and allowed anyone who wanted to work from home, they now are allowed to work from home. We're going to do that through the end of the year and the first part of next year. Productivity seems to be working. All the tools are there.
Okay, excellent. And Dale, why not address it to you, but also maybe you can speak to the ECIA member companies as well and the impact there, because I think you've been looking at that, haven't you?
Yes, we have. Early on, when the pandemic hit, as it originated in China, we were concerned about the impact on the supply chain, of course. And in early February, we began surveying our members to assess the impact on various steps of the supply chain, ranging from raw materials disruption to disruptions in component manufacturing, systems manufacturing, shipping and logistics, and through the loss of end market demand, eventually due to the recession that we entered. And so we were measuring that on a bi-weekly basis for a number of months, because this was a very fast-moving and dynamic situation. In fact, I've referred to it as a whipsaw that we've gone through this past year. We started out very concerned about supply and being able to have adequate supply of a range of components coming from China. And then we wound up very concerned about end market demand before we were done. As we measured all of those over time, we saw things worsening all the way through the July, August timeframe at various stages of the supply chain. Then we saw a significant improvement as we moved towards the end of August and into September, where in terms of an index that we measured, we saw every one of those measurements decline significantly. And so we saw a dramatic improvement there. And in fact, when we looked at individual component suppliers or component categories and the ability of companies to supply their customers on time, we saw the strong improvement in passives. In September, we measured that the large majority that by that time said there was minimal to no impact on their ability for on-time supply. Same thing in electromechanical. Semiconductors lagged behind a bit on that, but we've been able to measure that. But the good news is that at least as we come into October, we were in a very strong position. Now, as Don mentioned, however, we're going to have to watch carefully, because as we come into the winter months, there is, of course, significant concern about the reemergence and more difficult conditions with the pandemic.
Good. Yeah, I think contrary to political chatter, the pandemic didn't end with the election yesterday. It's something that's going to continue for a while, right? So we conspiracy theorists out the window here. Listen, and let me, Dale, if I can go a little further with you. I know that there's a lot of research that you're doing with the member companies there. And so within the components and supplier members, and you said you corrected me earlier saying that you're doing it on a monthly basis now rather than every 2 weeks. Can you tell us about what you've learned from those surveys about the trends from the sales side there?
Certainly. So the survey that we were doing that was focused specifically on the COVID-19 impact, that was bi-weekly, eventually migrated to monthly. Through this whole time, we've also been doing a monthly survey looking at the expectations for sales, looking forward a month and looking forward a quarter. We call it our electronic component sales trend survey. And so we do that on a monthly basis, and we look at that both in terms of component expectations and in market expectations. And the good news is that as we look at that survey, we saw a significant improvement in expectations for growth September looking to October, and now just in the data we just released, October looking to November. Now, the big boost was from September to October, we saw across all of the component categories and across all the end markets, whether it's data processing, automotive, electronics, industrial, et cetera, all of those categories saw a significant boost. Similarly, on the component side, whether it's capacitors, resistors, inductors, semiconductors, electromechanical, all of those saw a big boost. Now, in the index that I've created, anything above a 50 indicates a positive expectation for growth, similar to other indices that you see out there. And so we saw a strong move above that level in our index. And we saw a little bit of a softening, still above that 50, but a little bit of a softening for October, looking towards November, but still expecting sales growth, just not as strongly as we did this past month. So I believe we have, after a year of a lot of difficult challenges that the industry has gone through, I think we're seeing some more positive developments in the near term, and I believe we have some good trends going for the long term as well.
Very good.
Does that tie up with what you're seeing, Don? Do you see some parallels there?
Yeah, and it's not in all markets. If I go look at it, I mean, obviously at TTI, we service all of the end markets in a pretty big way. So if you look at the defense part of the business, it remained pretty steady throughout. You know, a little bit of a downturn just as, for just a very short period of time, a couple of weeks. The commercial air part of the business has gotten worse, and that's a pretty sizable part of our business, and we don't see any rebound in it at all. Matter of fact, we see it that it's continuing as Boeing, I'll say, cleans out the supply chain. There's a lot of excess inventory in the Boeing supply chain. Oil and gas is another one that we haven't seen any resurgence in. Everything else has rebounded, from a letter perspective, it's starting to look more like a V. Automotive has been the big surprise, or transportation. We lump it all together. That has rebounded much quicker than any of us anticipated. Luckily, we didn't adjust our inventory, or we would have been in trouble. It's come up that fast, and we don't see it slowing down. We've just, and Dell mentioned it, I know in the last report I saw, it talked about November being, I'll say not quite as robust as, September to October. We have not seen that yet. We're only, I'll say a few days into the month. We're 7 days in. Right now, it's at the fastest daily rate we've seen for shipments ever in the history of the company. So it's, and it's fueled. Industrial's been pretty strong for us. The automotive, as I said, has come back. Defense has stayed steady. Communications has come back nicely. Medical's come back to reality, I'll say. It's still growing, but it's not, it's not multiples like it was in the, I'll say in the start of the pandemic, but it's still double digits. So, it's, everything's matching. We're a little concerned with how fast automotive's rebounding, that we're going to have some supply chain hiccups. We actually just changed our algorithms a few weeks ago in order to drive our buyers to buy more product in anticipation, because I've been on more expedite calls in the past 4 weeks. I'm still on them, and again, a lot of it's related to automotive.
Yeah. So is the fact of the matter you're just having to deal with a much more volatile market now, and do you see that as just a new reality that you've got to build your business around?
I wouldn't say it's yes, it's more volatile. It's not. It's the uncertainty piece of it, though. I had a conversation earlier to where there's parts of our business that you wouldn't know there's a pandemic. It's more robust than we've ever seen it, and then there's other pieces that are like you're in a recession. So that's what it's. I'll say it's just the disparity of the views. Make this a little different than what I've seen ever going through this.
I might just comment briefly with what Don's been talking about. I saw a chart actually on the TTI Market Eye blog. And the type of environment that Don's describing, I think this chart is very appropriate. On the x-axis, it laid out demand uncertainty. On the y-axis, supply uncertainty. If both of those are low, you manage your supply chain from an efficiency perspective. If both of those are high, which is the environment we're in, the key word is agile. And I think Don's in an environment where he's got to be very agile.
Yep, absolutely, absolutely.
So, well, speak to that. So what are the major economic risk factors then that are having this impact on the component supply chain?
You addressed that to me?
Yeah, go ahead, Dale. Why don't you jump in first?
Certainly. So if we look at the major risk factors, I identify some that really emerge as I look at this and look at what other economists have been saying as they look at the economy. And the number one I would put out there is the economic confrontation between major powers. That has not gone away. I know we've all had our heads wrapped around the election recently, but the issues of the US-China confrontation, the UK-EU confrontations, all of those, the new trade agreements, et cetera, that are being worked through, the new agreements between US, Canada, Mexico, all of these changes in trade agreements are putting us in a very, I should say, unstable environment. And so these economic confrontations I see as the strongest issue that we have to deal with that threatens our economy. Behind that, the big impact on our economy with the pandemic ongoing, I believe, is the health of small businesses. Now, when we think small businesses, typically we're thinking, oh, the restaurant downtown. But the interesting thing is, in the electronics industry, we have a huge base of small businesses, small manufacturing businesses that support the large players, companies like a TTI, companies like an Intel, companies like Qualcomm and Apple, et cetera. They rely on a large base of small players as well. And those companies still have significant struggles, and everybody's been looking for relief, another round of government relief, but that has been held up in the political environment. The third one I would put in place is energy shocks. And those, I think, still sit out there as a concern, particularly now as we're looking at the likelihood of a transition in policies from the government as they relate to a whole host of factors, whether it goes to, energy situations, or if we look at what we're doing with tariffs and other issues, we're going to be going through, I expect, a significant transition there. So all of these and the uncertainty they create, I think, are the biggest issues we're facing from an economic perspective.
That's interesting. And Don, what's your view on that? Do you see the same factors? Do you?
Yeah, and I look at it, and I mean, short term, I would think the pandemic probably will impact our business faster than even the trade wars that have been going on. Like I said, we've learned sort of to live with those a little bit. I think longer term, that's the bigger impact. Short term, if we go through another lockdown, as we're seeing in Europe, what does the lockdown look like this time? Are they going to shut down all manufacturing? I mean, the truth is, what Mexico and the way Mexico handled the lockdown was much more severe to our business, to the electronic supply chain, than in most other countries, believe it or not, because they shut down, and that's what shut down the automotive world here in the U.S. So that piece of it probably to me is the biggest risk on the short term. I look at it that the stimulus package and everybody waiting, to Dale's point, our business is, yes, we sell to some of the largest companies that you see, and the name brands, but remember, with our businesses, Mauser and the TTI family total, we sell to over 600,000 customers. So most of those are small customers. We're concerned, we're watching them. We look at it from the financial stability of a lot of those companies. Knock on wood, they've held up and been much more resilient than I would have imagined. We've been out here in the Americas visiting customers on a road show. So my staff and I have been in and we've visited since the first part of the year over 200 customers, all sizes, so small and most have survived it better than they expected. So there's been very few, there's been a few talked about losing money during Q2, but most of them have rebounded. Most from an inventory situation seem to have their inventories in order. One exception is that Boeing supply chain that I mentioned earlier. There's a lot of excess inventory in the supply chain because Boeing didn't pull out the demand, nor did their contractors pull it out fast enough. But I'll say up to this date, we've been surprised. I've seen my DSOs push out a couple of days, but nothing, not a rash of bankruptcies or, I'll say payment plans or anything like that. So, will it get worse? If, probably, unless, and if the business stays robust, I think most will come through it okay, but I think some are going to need a stimulus bailout.
Yeah, and Don, you mentioned earlier about changing your algorithms so you're buying the right things, and you talked a bit about the inventory in the supply chain, particularly with examples like Boeing. Is digital transformation helping that? Does that give you more visibility up and down the supply chain? Are you seeing that from your customers? And does that help to what Dale said about providing a bit more agility in the market?
Absolutely. Well, if you look at what, we've all got a much better visibility, and, TTI, we're pretty lucky. We are part of a publicly traded company in Berkshire Hathaway, but we're managed like a privately held company. So obviously the demands on the return on working capital are much different. The horizons are much longer. So we're able to, I'll say, manage through it differently. We've got record levels of inventory throughout the world. We consciously made that decision. We sat down and, tried to determine, well, with this uncertainty and seeing parts of the business so robust, we decided to keep the inventory levels up and take our turns down a little bit in order to be able to weather it. But our visibility into, I'll say, the inventory at the suppliers, that helps us know, our own order. We know what to put on order. We factor in their lead times as well as our experience with their lead times. And that's probably more important of when they actually deliver versus when they tell us they're going to deliver. So we're able to do that. And then our customers have gotten better. And I think we'll probably talk a little bit about it. This has pushed everybody to, I'll say, more interest in, I'll say, going away from some of the aggregators that are out there and going directly with API connections. We've made a conscious push on it, but we've seen our API engagements quadruple in the past 5 months. So, and a lot of it's at I'm going to say the medium and small EMS accounts. They seem to be leading the way, but they want visibility into our data. And, by all means, we'll give them access to it to make sure that they can see real time.
Yeah. Dale, is that something your members are increasingly concerned about, the level of digital transformation and the visibility that it gives them in these volatile times?
Certainly. In fact, I've been engaged with 2 different organizations addressing this. Recently, I did a podcast interview with Tony Uphoff of ThomasNet. And ThomasNet's very much involved with helping people develop digital marketing, sales solutions and strategies. And that's where they come in their play. And Tony's made an interesting observation in that we've made great advancements as an industry in the adoption of digital technology on the manufacturing side of things. and how we handle things from, shall we say, the warehouse standpoint. We see all kinds of impressive solutions that are in place there. Where we've been slower to adopt that has been in our marketing and sales efforts. And in a sense, this pandemic has put us in a position now of where we've got to step our game up. And so, you know, Don, I think, has been fortunate to be able to visit companies, but we've seen many trade shows canceled. We've seen many companies move to a virtual environment and having to communicate with and engage with their customers where the primary engagement is not person to person. And so simply exchanging emails is not always the most efficient way either. And so companies, there are technologies out there that are valuable and that can help companies. And many companies now are investing more on that side of the digital transformation to complement what they've already done on digital implementations on the factory and warehouse floor.
Yeah, yeah. And Don, you guys have been pretty digitally enabled in terms of your marketing, sales and marketing efforts for some time. But I guess that's something with the, you know, I guess a lot of component distributors would be heading to Electronica this weekend, and that's not happening. So big shift there in terms of how you get thought leadership out there, how you communicate with your customers, how you meet potential new customers. How's that been going for you, Don?
And we saw it even before the pandemic. It was, I did a sales kickoff early in the year for our entire organization. And the theme was, we've got to learn to interface with the customer differently. We had already seen it. We'd been watching the number of customer visits, and I'll say we talk about meaningful visits. And we saw those numbers dropping over the past few years. So we had already started down the path on the virtual side. And so lucky for us, we had started down that path, or we wouldn't have, I'll say, embraced it as quickly as we did. So it's helped us quite a bit. I will tell you that we've seen the design engineering efforts probably actually do much better than the traditional calling on the supply chain people or the purchasing side of the business. We've seen an uptick in the demand creation generation from our entire organization. It's up 61%, I think is the latest number that I saw year over year. So it looks like that the engineers are more focused and more willing to give us the time virtually versus, you know, when we were trying to get in front of them face to face. So that's been a silver lining. And then the marketing efforts, I mean, social media, we'd started down that path, you know, a couple of years ago. And, you know, we've turned the organization, so it's not a marketing department, it's the people of the company who are really out doing more marketing than you can pay for anywhere else. Yeah. So you'll see us. I made the comment for this event we're doing today. Somehow my team got my picture and everything out, and I got tired of seeing it. So.
Yeah, I got a couple of those too, Don. I got tired of seeing your face.
I know. I don't like looking at myself.
Let me follow up with you on the API thing, though, if I can, real quick, because we hear a lot about that, and you know, we've been talking to a variety of companies that, you know, especially on the like the quoting side, right, and who are locking in and doing this. So tell us more about kind of how it's helping the industry and kind of what's included. I mean, because I think it's, generally speaking, we think of kind of price and availability of parts, but is that expanding? Are we getting into like data sheets and other information now being available through there?
It's going to go there. It's not there yet. To your point, it's, there's three main APIs that everybody seems to be interested in. And that's a search API, which is, I'm going to say, generic price and availability. And I made the comment earlier, a lot of customers were going to aggregators for that. They were going ECIA's, website, Trusted Parts. We participate there, and our inventory is there, and along with other paid services. that we go to. But the EMS guys in particular have looked at it and said, you know what, it'd be more effective if I could get in and go straight into my partners, my suppliers, my distributors who I do business with, and go do it. Now they've taken it one step further. The quoting software companies have helped take it there faster. CalcuQuote and Orbweaver's got some tools. SupplyFrame's got tools. There's some great tools out there. They've integrated APIs in there. So they're coming in, and I'm going to say, a more sophisticated, and I'm going to call it a quote API. I'll say there's still a missing piece of that, and where we're all trying to get to is to make sure that pricing is represented specifically for that customer. So obviously, our pricing algorithms are built. I'll say in the beginning, everybody was doing it as a discount off of web pricing. That doesn't really work when you start moving it into the mainstream. It's, if we've got a contracted price or we've been selling to that customer, we want to make sure that price is the first price, or a recently quoted price, or a contract price, or you can go to discounts off of, our markup off of cost. We've got other pricing guidance that we use, tools that go in for a particular EMS customer of this size, of this volume. Then, it helps give our salespeople some direction of, hey, here's what the prices normally would be. So I think that's where the industry is trying to go now. The order API, some customers are using the order APIs where they're placing. I'll say it's a small minority of the customers who are using APIs. What's going to come next are, all the other data points when it comes to even invoicing, when it comes to payments. It's good. Think of it as a low-cost EDI. So there's no, the cost to do it. It's the programming up front. And from our side, there's a lot of efficiency gains as well as for the customer, huge efficiency gains. It's where it's going.
Yeah. Maybe I could just make a few comments about what ECIA has been doing in support of the activities like Don's describing. We've done a number of things. One thing we've got ongoing right now is working to identify best practices in the design registration process. In the industry, people are all over the place. We just finished, not finished, we finished the surveys, but we're in the middle of doing work on identifying the current state, we call it, of the design registration, how we work between the manufacturers, manufacturer reps, and distributors. And if there's anything we learn, it is that there is no constant approach or standard in the design registration process. So one of the things we'll be doing is working to help identify eventually a best practice that can be adopted in the industry. We've also been doing other things. For example, certificates of compliance. We've seen, we consume, I don't know how many trees they estimate just with the paperwork associated with certificates of compliance. But now ECIA is heading up an initiative that can all be digitized with QR codes, and that can all be taken care of. And it can be a major contribution to the greening initiatives that we're talking about. So that comes into play in terms of certificates of compliance. And then even one thing, as Don brings on new people, one of the things we've done in a virtual environment is the ECIA Foundation is developing training, virtual online training solutions that can be used as we bring in new people to the distribution, electronics components distribution industry. This is something that can train them up from all aspects of understanding the industry, and some very exciting and impressive solutions that are under development that will be available online for companies to use. So those are some of the exciting initiatives that we've got going on right now.
There's clearly loads going on in that digital space. Because I could talk about digital transformation all day, you know that, Eric. But the last question I wanted to ask about that was when you look at this digital transformation, the data you've got is hugely complex, hugely challenging to deal with. Is AI taking a large role in helping you manage that complexity and helping you and predict? Don, are you starting to explore and utilize AI in the way you manage the supply chain?
Absolutely. You know, I would say a lot of it started because, to your point, we've all got a lot of data. So if you look at the number of transactions that TTI has just here in the Americas on a daily basis, and you heard me mention earlier, you know, we're using that data in order to help give guidance, you know, to our salespeople. So there's a lot of AI being used out. We're all scraping each other's websites. We know what pricing's out there, and it's you know, we're all doing it to each other, and that AI is coming into place. That all of a sudden, if we look at it, you know, and again, I'll give you the example: if we have no inventory on a part or very little, and everyone else has inventory, our pricing strategy with that part is different. If we're the only guys that have the inventory, you know, and this AI goes in and helps us determine if we're in a favorable advantage when it comes to inventory. I'll say a lot of us are already down that path. You know, we're using a lot of AI and, you know, to streamline processes internally. So we've got bots that are going in, taking a lot of heavy transactional work, administrative type, that we're using those. I don't know how many, the last number was 20 or 30 of those we have running, you know, in our business every day. So it's, you know, we're all looking. We're not down there yet. Yeah. We hope it gets there further on the buying habits of the customers, to where, you know, we can use it to be a better supplier to them and anticipate the needs a little bit, and help identify maybe a trend they don't see, but, you know, ahead of them picking up the phone and calling us.
Yeah. And Dale, is that reflective of what's going on in the industry? And is AI one of the routes to more agility and more resilience?
Certainly, it's not an area where we've engaged in a specific study focused on AI, but you know, just based on my ongoing research at secondary sources, certainly there is a great deal of engagement and exciting new tools that are being developed using AI, and even how we visualize what comes out of that. One of the key critical issues is, yes, you can have AI and it can help you with many things, but there still has to be that human interface. And some of the exciting tools are the tools that help us visualize what we're learning from all of this. And so both on the back end with the AI that's taking place there, and on the front end, how we're presenting that, both sides of that, I see exciting developments.
Yeah, and it's that idea of augmenting people rather than replacing them, and using AI to actually process that huge amount of data you're getting pretty much every second. On you've got to process that and put it into a dashboard that can help you guys make better decisions, rather than just take that data and make decisions for you.
Correct.
Yeah. Let me shift a little, if we can, in the time we have remaining here. I wanted to ask about the onshoring phenomenon, right? What everybody's been happening. And so what about onshoring, and how is that trend developing in the component supply base? Is, you know, China forever, everybody talks, it's going to be there for quite a while longer. But what are you gentlemen seeing, and what are your thoughts on that? Dale, why don't we start with you, sir?
Well, actually, it's interesting. Even before the onset of the pandemic, I did some research on the US import-export data, and analyzing that data for electronics components, what's being imported into the US, you could already identify a significant shift on the sources of supply of components coming into the US. And you could already see, with at that time, one exception, a big move away from China. The only exception at that time was MLCC capacitors, when China was kind of the only game in town for that. But outside of that, we'd already identified significant shifts. Now, the pandemic has accelerated things, certainly, and sourcing some research from another firm called Foley and Lardner, I found some statistics they published recently quite interesting. They first pointed out that in the survey they did of manufacturers, 43% had already withdrawn from China or were planning to do so. Now, that doesn't mean it's coming to US, Mexico, Canada, but it means they're probably looking at other options in Asia, such as Vietnam. And, many more expecting less focus on just-in-time inventories and even less focus on achieving the lowest cost with their suppliers. And so we've seen a shift away from that. And what we see now is a shift towards onshoring, reshoring, where reliability of supply becomes much more important in this environment. And in this same survey, what they found was that of those that are planning to relocate sourcing out of China, 74% were saying that was coming to the United States, 47% to Mexico, 24% to Canada in this particular survey. So the United States is going to be the primary location many people are looking at as they reshore many of these activities. And, you know, the fact of the matter is the digital technologies we have today in manufacturing make the US option a much more viable solution for production of components than it was in the past. You know, you're not facing the same labor cost rates, et cetera, and can do many things that can make onshoring of products much more attractive. Now, the one caveat to that is that as China built up this infrastructure, the ecosystem they had in place that surrounded all of this was critical. And you can't just immediately transplant that into a new location. So you shouldn't expect an immediate overnight transformation. It's going to take some time to develop this necessary support systems to go with that. But companies are definitely pursuing this need for a more reliable source of supply.
Don, what's your experience with this issue?
Yeah, what Del said, it had already started before the pandemic. The tariffs, I'll say, woke up the world a little bit, and a lot of our suppliers had started looking dual sourcing to where they had manufacturing. They started moving manufacturing out of China. They were able to switch our supply chain so that we could get product that was not manufactured in China. They did. A lot of them first look close by. Vietnam, as Del mentioned, they found the infrastructure around there was not anywhere near what it needed to be. So they started looking. Malaysia seems to have benefited quite a bit in the Asia region. And then some already had plants in Mexico. So they moved a lot of it back, as much as they could, expanded plants in Mexico. So Mexico, from the first wave, tariff related, in our eyes, we had more of it move to Mexico versus coming all the way back into the US. Now the pandemic and what happened as plants started shutting down in all these countries, people were frantically trying to look for US-based sources. They felt like they had more control over it. And I agree with Del that, the future is going to see that there's going to be more manufacturing brought back actually into the States. And we're seeing that. I'm not sure, I think 74% that you said were saying that they were looking for it to come back. I don't know if it'll ever get that high. I still think Mexico's a good alternative. One thing that we didn't talk about earlier when we were talking about the disruption in the supply chain, and I can't believe I didn't bring this up. What really has been the hardest thing for us to deal with is less about, getting the parts and more about how to get them here. With what's happened in the air, the commercial air and the airline industry, you can't get on airplanes. I think I read an article the other day that, the air freight was down a lot further than even commercial air traffic, because, none of us can get it and the prices have gone up. So everything we get quoted is all based on, much higher prices, and we have no, I'll say, guarantee that it's going to arrive, in the time frame that we paid for. So that's really hurt us. And even trying to put it on the ocean, you know, the ocean, they were in the beginning, they were waiting to fill up the ships before they'd let them sail. So being able to predict how long it was going to take. But all of those factors are also playing into that, bringing the production back much, much closer. And that's even helped, even in Mexico. You know, I've got 7 proximity warehouses in Mexico because that infrastructure is still not that great. In order to be able to deliver same day or next day, there's no way to do it, even from Texas, trying to get it in there.
Yeah, no, it's been it was interesting to learn how dependent we were on belly cargo in commercial passenger airlines rather than just transport aviation.
Yeah. Hey, Don, I wanted to follow up because as you were speaking there, I was recalling when we spoke earlier this year on a previous show, and you made a comment about how from the component supply base, the suppliers, their ability to match the growing demand was going to be challenged because they were somewhat reticent to be bringing on more manufacturing capability in that regard with such volatility. And then the pandemic hit, right? Which worse. So how do you see that now? And does reshoring somehow factor into that in a favorable way?
Yeah, as a matter of fact, I was on a call with a supplier, a passive supplier earlier today, and they've invested in more factories, both in the walls and in the equipment and in the people. There was one factory that they still are having problem meeting the demand, and you know they'd increased the workforce by 20% even during the pandemic. You know, and then so they were able to get the people in, and this is in a Latin American countries where it's located. So that's good news. But then they have got the onboarding. They've got the time to get the people up to speed. You know, they say there's been a little bit of delay in some of the equipment. Now, somebody, I think Dale may have mentioned MLCCs, or one of you guys did earlier. Obviously, we're one of the largest distributors of MLCCs, and we lived through 17 and 18. That we got a little bit of relief as I'll say the smartphone guys, you know, their sales went down there for a period of time. Automotive, I'll say, tapered off. You know, we're seeing, I'll say, the constraints pick back up a little bit. There is more capacity. A few guys in Taiwan did put quite a bit more capacity in on the, you know, I'll say all case sizes. But still the larger case sizes, there's some of them that are still very difficult, you know, to get your hands on. And we watch that, trying to make sure that we've got enough, but I've still got concern there.
Gotcha. Listen, I'm cognizant of the time here, so I thought, you know, maybe ask a looking forward question to wrap, and maybe Dale, start with you here. I mean, what is as we look forward out of this horrendous year we've just gone through, which, you know, was made even worse by daylight savings that added another hour to it for us, right? So, but what is your forecast for 2021 for the electronics industry? And as you look at a recovery, what's your prediction as to what shape that might take?
Thanks. I see, you know, just to comment briefly on the foundation for that from 2020, the electronics components industry has been amazing in how it's weathered that. You know, when we started in on this, we were concerned that we would see, I thought we could see even another double-digit decline in semiconductor revenues. The reality is we're going to probably wind up around 4 to 5% growth annualized by the time we're done with this year. And similarly, in passive components, 2019 was a much more difficult year for passive components in terms of revenue growth than 2020. And so, and we'll even see a couple of categories in the passives area that will actually see some growth this year. So we've weathered this year quite well. Looking forward, I've latched on to we've used all the different letters to describe the recoveries. But one that I really have, especially with regard to technology and electronics that I've latched on to, comes from the Conference Board. when the conference board published their economic forecast, they had a most likely scenario, but then they had an upside scenario that they called their swoosh scenario, kind of like the Nike swoosh. And I believe that the forces are aligned, that we have an opportunity for, I believe, a strong growth wave moving into 2021. You know, Michael Knight, who works with Don, he has a very impressive presentation where he goes through all these different exciting technologies and the role they're going to play in stimulating new markets and new opportunities. And we've seen some of that held back this year, really. Kind of like, you know, the movie industry, they've held back some of their movies because there's no market for it. Right. But I believe that we're going to unleash a lot of these forces, more deployment of IoT. We're seeing the 5G deployments coming up. We've seen this year the cloud infrastructure coming into place. Those are just three of the more high profile things. Mm-hmm. But as we go through all of these exciting technologies that are lining up, I'm a believer in the swoosh scenario for electronics as we move forward.
I like that. Don, what's your sense of it, sir?
Yeah, and I looked at it recently, and I made the comment in an interview I was doing earlier that it's looking more like a V, believe it or not. And I'm, you know, and I would have never said that, you know, to Dale's point, if you had come to me in second quarter, I would have said, hey, we're probably going to be down double digits year over year. And TTI, we've held up pretty good. We haven't had a down year in over a decade. So it's you know, we've been lucky that we've sustained growth even through correction cycles. It looks like now that we're going to be, and I'm going to say flat year over year after I'll say record growth for about three years in a row, which we consider a big surprise where we sit today. You know, we're seeing signs, as I said earlier, that we're still seeing acceleration, but I was looking at charts, and if I look at it, it was a very sharp decline. We had record, first quarter was the biggest in the history of the company, and then I forecasted it to drop 30%. It only dropped 16 because it only dropped in April and in May. It turned around and it rebounded 18% in June. So we started back in a hurry. And again, part of that's the diversity of the customer base that we support. But it's continued. Every month's been a little better. And so, you know, we're back up, and Q4 looks like it may be, you know, the new record for us. So that's the reason for us. We've been lucky, and it's looking more like a V. I agree with Dale that the technology, and we don't let Michael present this time of year. It's budget time. So we try to put him in the closet till we get finished negotiating our budgets. But I do agree that that with the electrification of, you know, everything and connecting everything, you know, the commercialization of space, our space business, that piece of it has gone through the roof, and those are not inexpensive parts. And you've got, you know, commercial companies doing that, and it's not NASA or anything. So, you know, the electronics industry, you know, we're very, very bullish that the 2020s are going to be, you know, exponential growth for electronic components.
Yeah. Yeah. No, it's fascinating, isn't it, to see what's going on? And I think because the underlying base of the industry was pretty solid, then this is a disruption that's layered on top of it rather than fundamentally damaged it. When I look going forward to 2021, I think it's interesting that you talk about reshoring. I think digital transformation is going to help that. You talk about agility. I think digital transformation is going to help that. You talk about resilience. Again, digital transformation. I think it's actually helping drive demand as well as helping you do your jobs as component distributors better. So, you know, I take on that role as the digital evangelist very, very happily, and I think it's going to play a key role in 2021. But I think, I think there's potential for a steady and solid recovery as soon as we can get past this the unpredictability of the pandemic, and maybe the vaccine is a vaccine is the way to do that.
So it sounds like, I like that, from the swoosh to the V to the, what I got out of that was the roaring 20s, a colleague of mine to before, and maybe we're heading into them again, right? But anyway, listen, we've come to an end here, gentlemen, and I just want to thank you both, Dale and Don, both, for taking your time, sharing your insights, sharing your thoughts, and being candid in your responses here. This has been excellent, and I appreciate it, and hopefully we can catch up again in the future, maybe in 2021, and see how things are proceeding here. For the audience, thank you for joining us. Next one we have actually is going to focus on China. With all this reshoring talk over the year, I thought it would be good to talk to some people in China about their view of everything leaving, and so should be an interesting discussion. So please join us in 2 weeks for that. Phil, thank you again, as always, for your cooperation.
You're welcome.
And gentlemen, thank you again for your time.
Thank you.